welcome to MyWealth.com. I'm Bob O'Brien, the head instructor with the courses. Welcome to the blog for the day. It's Obama's economy now. And I say that as a compliment to the fact that the Obama administration has really stabilized things, a really severe, for those of you that don't believe that this economic crisis is very real, just match up the stimulus that's been provided to other recessions and so forth. It's really unprecedented, the amount of stimulus that's been provided into this economy. And I give our political leaders a lot of credit for doing that, because there is a renewed sense of optimism out there. The markets have stabilized and things are looking up as opposed to, say, the fall and even a couple of months ago where things really didn't look that good.
I got some great links for you on the written blog, so make certain that you check that out at www.mywealth.com/blog. And you can also just click on the link, the hyperlink in the upper right-hand corner if you're watching on YouTube. Okay, the stock market is stabilized. The NASDAQ this year is actually up 10%, and the Dow and S&P 500s are pretty much level, which is a huge jump considering from where we were just a couple of months ago, where the Dow and the S&P were really down quite a bit. So the stock market has really rallied in the last month or two. Consumer confidence has gotten better, and the real estate bottom is nearing. We're starting to see a little bit of light at the end of the tunnel with real estate. More people are buying homes at the much lower prices. The prices are still coming down, but there is more activity in the market. So that's all in all, these are good signs for the economy. Now, on the flip side of that, inflation and stagflation signs are starting to appear in the economy. Oil is up nearly 50% off its lows of just a couple of months ago. The dollar is starting to weaken, and interest rates are starting to rise. So these are going to be some of the real challenges going forward. We're really still a long way off from a healthy economy, but things have gotten better, and that's the main thing here. But we still want to make certain that we're looking after ourselves in this troubled economy. And things that you want to be careful of is the stock market. Don't get too revved up about the stock market rally that we've seen, because this has been a government-generated rally, but with a lot of stimulus and so forth. We still need profits from these underlying companies, strong profits from these underlying companies, and economic growth in order to have a sustained rally. Favor small and medium cap stocks in the economic climate going forward. Smaller companies do have more flexibility than larger companies, generally speaking. And so if there are a lot of regulations and, of course, things like inflation or stagflation, smaller companies are more nimble and they're more easily ready to adjust to changing environments. Lean towards emerging markets. Money is pouring into these markets right now because they still have so much more room to grow. And many people believe that China will lead the world out of this recession. And they, of course, are one of the largest emerging markets. And so, look to, again, perhaps with your discretionary portfolio or small amounts in your goal-oriented portfolio, look to take advantage of some of the returns that may be available there. Protect yourself with tips. These are Treasury inflation-protected securities, and these are a good place to be to protect your purchasing power of your money, because they have an automatic hedge against inflation where they give you the automatic inflationary rate plus a flat rate on top of that with these types of government-backed securities that are specifically designed to protect you against inflation. These are the type of things that we go through in our course. So, don't wait. Get educated. Get into our investing course at www.mywealth.com.
I I realize that if you're a long-term investor, some of this doesn't really matter to you. And that's what really, we look to change here at My Wealth. And that's great if you're a long-term investor and you're just going to ride out the swings of the market and so forth. And in fact, we encourage that with with your goal-based investing for your retirement, children's education, and so forth. But it's also important that you stay engaged with what's going on in the market. And that's why it's good to have a discretionary portfolio as well, where you are a little bit more active. And this way you're more engaged with what's going on in the market. Because some people are going to view this current rally as that's it. Things are over and nothing bad can happen. And that's the mistake you don't want to make. A lot of the optimism, the market's doing well, coming back, being positive for the year, the NASDAQ being up 10%, is really based upon government stimulus. There has been some other things, some other change in the economy, but for the most part, it has been government stimulus. And that's what you really want to make certain that you're careful of, and you're still able to identify good investments. And that's exactly what we help you do in our investing course. So make certain you check that out. Again, my name is Bob O'Brien. I'm the head instructor with the courses. I look forward to seeing you in the course.